Stablecoins crash drags down the crypto market, and Bitcoin has its most volatile week in years. Bitcoin has dropped nearly 18% in the last 7 days, while Ether has dropped more than 25%. A sharp drop in stablecoins has made crypto markets vulnerable in recent days. This week, the crypto market hit rock bottom as a sharp drop in so-called stablecoins soured investors' mood. Bitcoin had its most volatile week in more than 2 years. Saturday was yet another example of a panic sell-off in this market, with Bitcoin leading the way, erasing even the $29,000 mark. Ether has struggled to maintain the $2,000 level. According to CoinMarketCap, the global crypto market cap is currently $1.26 trillion, a 2.38% decrease from the previous day. Meanwhile, total crypto market volume has dropped nearly 27% in the last 24 hours to $91.32 billion. DeFi's total volume is currently $13.91 billion, accounting for 15.23% of the total crypto market 24-hour volume. Furthermore, the total volume of all stable coins is now $81.13 billion, accounting for 88.84% of the total 24-hour volume of the crypto market. Bitcoin fell to a low of around $28,700 today. It gained traction and reached slightly more than $30,000. However, it has remained volatile and is currently trading below $29,500. Bitcoin's dominance is now 44.50%, up 0.17% from the previous day. Ether fell below $2,000 today, reaching an intraday low of $1,956.57. However, it is currently valued at slightly more than $2,000 on CoinMarketCap. Bitcoin has dropped nearly 18% in the last 7 days, while Ether has dropped more than 25%. A sharp drop in stablecoins has made crypto markets vulnerable in recent days. According to Bloomberg, the loss of algorithmic stablecoin Terra USD and its sister token Luna reduced the crypto sector's total trillion-dollar value by more than $270 billion. Notably, according to the report, the weekly net change in Bitcoin volatility was the highest in the 2 years since Bloomberg began collecting data. Tether is trading flat and below $1 on Saturday. However, Terra USD has increased by more than 13% but is still trading at around 20 cents. The blockchain has been halted due to extreme volatility in Terra Luna. The Terra validators are considering a mechanism to rebuild the network. On Friday, Terra USD, powered by Luna, said on Twitter, the Terra blockchain has officially halted at block 7,607,789, adding, Terra validators have halted the network to come up with a plan to reconstitute it. Terra Luna's level is close to zero. Last week, on May 7th, Luna was trading around $72. It has dropped by nearly 100% in the last 7 days. On Saturday, even other crypto market platforms could not avoid a selling bias. NFT fell nearly 29% in terms of volume, while it fell nearly 4% in terms of market cap. Metaverse tokens' market cap and volume have dropped by 2.5% and 19%, respectively. Polkadot ecosystem tokens' market cap and volume fell by more than 3% and 26%, respectively. Solana tokens lost more than 2% in market cap and 25.5% in volume, while Avalanche tokens lost more than 3% in market cap and nearly 32% in volume. Flow token and ApeCoin have dropped nearly 37% and 38% in the last 7 days, respectively. Mana fell nearly 16%, while DOT fell nearly 24.5%. Stablecoin risks can be mitigated if they are backed by reserve assets. Stablecoins backed by reserve assets with clear fiat currency value, according to Fitch, face a fundamentally different set of credit issues than algorithmic stablecoins. In such cases, the stability risks of the stablecoin may be more manageable, depending on a variety of factors, most notably the safety and liquidity of the reserve assets. According to Fitch's latest report, other factors relevant to the credit profiles of issuers of reserve-backed stablecoins include regulatory risk, counterparty risk, including reserve custodians, transparency over reserves and the extent to which the underlying assets are truly uncorrelated, stablecoin holders' legal rights, and governance and operational risks. According to Fitch, if investors lose faith in stablecoins, there could be significant negative repercussions for cryptocurrencies and digital finance. The latter, by providing a stable link to fiat currency financial markets, play an important role in catalyzing the crypto ecosystem more broadly. According to Coinbase Institutional's Brian Kubelis and David Duong, despite larger volatility than during the sell-offs in January or December, volumes are still somewhat lower in comparison, which suggests lighter positioning as well as potentially decreased interest from retail due to a difficult market environment, according to Bloomberg. If Bitcoin prices continue to consolidate below $30,000 in the coming days, Coinbase analysts believe it will become a major resistance. According to them, if things continue to deteriorate, the next line of support would be around $20,000, which was the all-time high in the previous 2017-2018 cycle.